Good morning, everyone. Esteemed guests and participants from around the globe, myself, C.A. Shweta Goel, Secretary SRSB, would like to welcome you on behalf of SRSB to today's webinar on sector-specific sustainability, a deep dive into GRI sector standards. In today's business environment, where sustainability has taken center stage, sector specific approaches to sustainability reporting are becoming indispensable. The GRI's Global Reporting Initiative sector standards offer tailored guidance and enabling organizations to tackle industry specific challenges and unlock unique opportunities. Our today's session will shed light on the importance of the sector specific standards, provide practical guidance, and offer actionable strategies for conducting effective material assessments and crafting robust disclosures. We are honored to have with us CA Kaushik Mahadevanji, a distinguished expert in sustainability reporting, who will lead our today's session. And on behalf of SRSB, I would like to extend my heartfelt gratitude to all of you for joining us in today's webinar. Now, I request Mr. Tejas to introduce today's speaker.
Kaushik sir is a seasoned professional with over 2 decades of expertise in ERP, accounting, and ESG. As a GRI certified sustainability professional and a dual qualified chartered and a cost accountant, he blends financial acumen with cutting edge technologies like AI, ML, and ESG. Currently leading ESG strategies at 4C Technologies, he drives business transformation and sustainable practices through data driven solutions, positioning him as a thought leader in sustainability and innovation. So, over to you, sir.
Thank you so much, all of you. Thanks, Tejas. Thanks, Shweta ma'am. Thanks, Chindu. It's an absolute pleasure to reconnect again with all of you. And thank you to all that you see value in these sessions or conversations that I bring to the table. Totally honored in terms of what you are actually embarking from a ESG reporting point of view is concerned. I'm just sharing my screen. Let me know if you're able to see it. Once it blows up on the screen.
Yes, sir, it's visible.
Excellent. Thank you so much. And I think for the convenience of all, if all of us can actually mute our mic, I think the session becomes a little more impactful. As you see on the screen, why we are here basically to deep dive a little more further than what we did, let's say, in the last two sessions, to understand GRI in a broader perspective. And I think it's a great initiative to by SRSB as well as ICAI to organize something like this and ensure that it kind of actually percolates down, and at some point of time it starts reaching down the grassroots level. This is one of my very favorite, let's say, quotes by Peter Drucker, the great management guru. He very well articulated, saying that what gets measured gets managed, and I think you would have seen this particular quote in my last or my previous session as well. By the end of this session, I'll ensure that people who have not, let's say, heard this, or people who have heard this but are not sure how this gets, let's say, applicable from a GRI context or from a reporting point of view, I'll ensure that this gets a little more, let's say, well understood and a little more well implied. To start the session, we have a quick introduction. We also cover quickly let's say, what GRI is actually all about, what sector standards specifically, and why we have actually assembled over here, and what GRI sector standards actually mean. I'm also fortunate enough to have actually worked in the last year or so using, let's say, GRI extensively for our, let's say, projects and implementation and consulting expertise that we actually bring across the table. So I'm glad to share let's say, a couple of case studies which I thought will be pertinent to the conversation today, because I think the topic itself, although we are saying on one side that how do you deep dive, but I also wanted to put across, let's say, some practicality of where, let's say, somebody like us is actually today perusing, let's say, the sector standards specifically from a GRI point of view. which also brings to a very pertinent point today, because what if, let's say, certain sector standards are not available for the industry that you're working on? I mean, do you not report? Are you not supposed to be reporting? What do the regulatory framework speak about? What should be your thought process? Is something I thought will again be very pertinent about. Then we cover quickly an ocean of a topic, called as materiality assessment. We'll probably today. I think today, given the time constraints, we will. I've done my best to put up, let's say, about 4 or 5 slides to for someone who understands this in a deeper context. It will be easy for you to understand, but somebody who is listening to it for the first time, we shall ensure that they have a good takeaway around let's say what materiality, what assessment, and what materiality assessment per se actually is all about. The next very important topic, which is steps in ESG reporting, we also cover a little on let's say the pitfalls on reporting, and specifically I would also touch upon, let's say, a slide where I also want to talk about let's say how issues related to data is actually becoming a pitfall of sorts. I wouldn't say pitfall, but then these are, let's say, the evolution stage. We are in the transition stage right now, right? And quite a few things today are very transient in nature. So it's important for all of us to understand, in practice, where do we actually stand? It's great to read or study something in theory, but it's absolutely a different ballgame, when it comes to how you apply that in reality. Lastly, we also cover a little on the assurance side of things, where we are, what exactly assurance means, how our organization is looking at it. I would also like to share, let's say, a few of my experiences, working with some large corporates, let's say in India as well as globally. And probably towards the end, we can always have a Q&A of sorts. My name is Kaushik Mahadevan. A quick introduction about myself. I started my career as a ERP consultant, got into the IT scheme of things, very early on after I finished my CA and CWA. Founded a couple of ventures, exited those, and then sustainability was something was very close to my heart. For the last, let's say, couple of years and plus, we now actually represent a company called Fosia Technologies, of which I'm actually one of the co-founders. We do data as well as ESG consulting and ESG automation as, let's say, one of our key offerings today. Yeah. And since we also have a background on data, I believe that we understand, let's say, the ESG context in a little more better, because ESG consulting is not just about let's say guiding the organizations on how, let's say, ESG disclosures are supposed to be adhered about, but it is also that how do you ensure you're helping the customers to overcome the challenges with respect to data, because in today's times, I think the ESG journey is not complete unless and until the organizations really realize that I mean, how the data gets ingested, how, let's say, multiple facets of data get pulled from multiple data sources, how it is transformed in the ESG language, and how, let's say, reporting frameworks can eventually help you from a reporting or, let's say, compliance point of view. Yeah. To those who already attended this particular session, a quick recap for all of you. What we did in the initial couple of sessions was, we kind of demystified what ESG is all about. We understood the nuances around ESG, how, let's say, the concept of ESG came into the picture, what was UN's role, how does, UN Sustainable Development Goals, well, let's say, kind of aligns with, what ESG frameworks actually speak about today. Somebody like GRI today, for example, is very well aligned with, let's say, UN SDG. So we saw all those facts in our previous sessions. We learned a little bit about GRI. We understood the GRI structure. We also deep dived a little bit about what universal standards are all about, where we understood what general disclosures are actually all about, what are the principles of reporting when it comes to GRI standards is concerned. And very importantly, we also covered, in my opinion, in pretty, let's say, good nick in terms of what data and the ESG reporting looks like. What is the nexus with respect to data and ESG. Lastly, I think we also did cover, let's say, a little bit of pitfalls on the reporting, which I think today also I would like to cover this in a little more detail, because I believe that some of you who have attended the previous sessions would have actually understood in deeper perspective. So today, when I put up the slide with a little more information, I think you will be able to resonate it in a little more deeper perspective than I mean what we have been actually speaking about. With that, I'll quickly cover for those who have not, let's say, been privy to these sessions or who couldn't attend for whatever reasons in the past. GRI as an organization was actually established in 1997, headquartered in Amsterdam. They are somebody who works very closely with the United Nations. They're one of the pioneers today when it comes to coming out with, let's say, frameworks with respect to how an organization is supposed to go about, when it comes to ESG reporting. Yeah. Now, the structure of ESG or the whole GRI standards is, it's basically broken down into where they actually guide what is universal standards, what is sector standards, and what is topic standards. Like, for example, you may belong to a certain sector, correct? Now, so what is applicable for you is what, let's say what GRI prescribes. You pick up those nuances, take those guidelines, take those topics, and start reporting as per, what GRI talks about. If you are somebody who actually follows GRI, then obviously, you need to fall in line with, what GRI prescribes. So you adopt the universal standards in line with, let's say, reporting practices, reporting principles. There are general disclosures about the reporting organization. There are general guidances or guidelines about, how the material topics, I think we accountants understand really well. Something which is material or which is very pertinent for your businesses or business processes becomes a material topic, even in the GRI or let's say ESG scheme of things. And then the GRI sectors are basically broken down into multiple sectors today. Today, we have got about 4 sectors for which GRI has already issued very specific, let's say, standards or guidelines. Like the ones which are actually already out is actually oil and gas, mining, marine industry. Yeah. And I'm given to understand that, there are a couple of more standards which is actually on the anvil. I think in the next quarter or a couple of quarters, we can actually expect, more standards coming out from a GRI's context point of view. Once you pick up the sectors, the sectors are then divided into, let's say, different topics. Yeah. Like, for example, if you belong to, let's say, oil and gas, then oil and gas in turn has got multiple topics on which you are expected to report from a GRI context point of view. So to that extent, the whole ESG reporting, absolutely becomes a cakewalk of sorts. But is it really a cakewalk? Is something we'll see, let's say, in the upcoming slides right now. Yeah. Just for posterity, I think you would have seen this in the previous sessions as well. I mean, if you look at the GRI standards, this is how it looks like. The disclosures are very clearly numbered. People or let's say organizations today exactly know when they adopt a GRI, let's say standard. For example, GRI 203 very specifically speaks about indirect economic impact. GRI 304 talks about biodiversity. Then if you look at, let's say, any other aspects with respect to the social side of things, it's very specific, yeah, saying that, how this basically works. Now, within that, there are, let's say, guidelines, there are steps, there are, let's say, disclosure norms, which very clearly is elucidated from a GRI context. And today, if you ask me, somebody who is really enthusiastic about learning all this, it is just about, learning it, understanding it, and applying it in your practice. It's as simple as that. But again, is it as simple as that? Let us see, how the whole session actually unfolds today. Now, we are here basically to understand, what GRI sector standards is actually all about. Now, what is GRI sector standards? Now, specifically, these are sector-specific standards, which is being issued by GRI. Like as I said, today, if you or your customer belongs to, let's say, the oil and gas industry, there is a very, very specific, let's say, sector standard which has been already issued. Yeah, what GRI is doing today, and which I think is very apt, they are picking up industries based on the highest impact from ESG context point of view. So which is why you see oil, marine industry, let's say the other industry, which they are actually picking up, is actually the highest ones, in terms of how they are impacting the ESG factors per se. Yeah. The standards then eventually complement with the universal and the topic standards, because it's not that, these three, let's say, subtopics are not aligned with each other, they're very well aligned. Universal standards, as the name suggests, it's a little universal in nature. So you got, let's say, general disclosures, which is kind of applicable to every industry, irrespective of, whatever sector you actually belong to. Yeah, every reportee has to adopt the universal standard. It gets a little more granular when you then start picking up and saying that, when I belong to, let's say, the mining industry, for example, mining industry today, GRI has very beautifully given out, let's say, how you are supposed to go about from your sector-wise reporting point of view is concerned. That sector eventually is then broken down into, let's say, about 150 to 200 topics, based on which, let's say, the whole GRI reporting structure needs to evolve, needs to be complied with, and it needs to be published for, let's say, public usage, public consumption, or any other perusal that the organization actually specifically looks for. So simply put, it has got industry-specific guidelines for reporting, tailored reporting, which is very specific to sectors, identifying the impacts, risk, and opportunity. And it goes without saying that it aligns with the topic standard, because as I said, the topic standard for mining will be very specific to, let's say, mining industry. Obviously, it is not going to speak about, let's say, how a retail industry looks at from a reporting point of view, right? So it's quite logical in that particular context. The key features are today there is a sector-wise guidance on how let's say the materiality needs to actually function for every reportee in this particular case. There is a global applicability of sorts, because it's kind of generic at this point of time, but I believe that over a period of time, organizations will start evolving. Like in India, for example, I have seen a lot of companies today, let's say adopt, let's say BRSR, and then they kind of actually align with what GRI speaks about. Why this is done is there are two reasons, right? One, GRI is a global framework. BRSR is very region specific, correct? And again, why do you do this? Let's say any company in India can actually get away with just reporting BRSR, correct? But typically, large organizations, organizations with a vision and with some sort of a thought process in their, let's say, forward-looking capabilities, they also want, let's say, the world to look at them, right? Somebody falls on their website and, chances upon the ESG reporting. If you just speak about BRSR, let's say somebody sitting in Europe or in the US or in Australia, an investor or a potential investor for that matter, he may not understand, what a region's specific ESG reporting is all about, correct? So which is where, let's say, once you align, let's say, the region specific reporting with a global framework like GRI, it becomes a tad easier. Your global visibility obviously increases. Your geographical reach becomes a little more easier from an explanation point of view, right? One of the key features, even when I think GRI came into existence, or let's say the reporting standards came into existence as early as, let's say, between the 2015 to 2020 and the, let's say, the 2021 evolution of sorts, when it actually happened, there was a huge push to actually have a great amount of inclusivity. Now, inclusivity, till very recently, till, let's say, ESG happened, most of the organizations would think inclusivity is all about, let's say, very internal, right? That is not how it is today. Now, today, I think we are also speaking about double materiality, right? Now, double materiality from an ESG context is something which is internal, and then, how are you taking care of your external factors as well, and how do you report aspects, which kind which kind of impact externally. That's what double materiality is all about. But the crux of the matter over here is there is a huge push from a stakeholder inclusivity is concerned. So GRI prescribes and ensures that all your materiality assessment, your sector-specific standards speak very clearly about how you take care of even the external stakeholders, not only just the internal stakeholders per se. Yeah. It aligns very well with the universal standards, because again, if you go back to universal standards, it very clearly speaks about the general disclosures. It speaks about the reporting principles and the practices that an organization is expected to report on. It also speaks very specifically about, to report on what are the material topics for an organization. And then it kind of, deep dives on the nuances of, what a certain sector specific standard, let's say, reporting looks like per se. Yeah. As I said earlier, now I thought this is important for all of us to actually understand. As on today, yeah, there are 4 sector-specific, let's say, standards which has already been issued. If you belong to, let's say, oil and gas or coal or agriculture, aquaculture or fishing or mining, for example, it's very easy for you to report on GRI standards today. The other standards are right now in the process of getting developed. As I told you, GRI has always followed picking up those sectors, which have the highest impact from an ESG context point of view, right? Today, I think, if I'm not mistaken, I think the BFSI is the one, or let's say the financial services industry is the next one, which is considered to be the highest impact. And I know some of you might think that, how is a financial services company really the one which can be considered as the highest priority from a impact point of view? you'll be amazed to know that, in the financial sector, specifically the banking, they are the ones who are considered to be the highest polluters from an environment point of view. Even I had a chuckle in my psyche, in my expression when I actually heard this, because I failed to understand that, how is this possible? So that's when, when one of, let's say, my mentors then actually, advised and told me that today, if you look at, let's say, the banks, the banks end up funding petrol or diesel vehicles, correct? So if you look at the quantum of, like, let's say, vehicles put together, I think the numbers will be, absolutely huge per bank. Let's say in India, for example, it's going to be in millions today, right? That is where, let's say, the green bonds, the green loans, the green lending, everything actually came into the picture. And I think that is still actually evolving. So which is why today, with environment being the specific focus for most of the organizations, and from an impact point of view, financial sectors is the next sector which GRI is expected to actually release the sector standard specifically in the coming quarter or a couple of quarters. Yeah, I don't have the specific date at this point of time, but I'm given to understand it is actually soon on the anvil. And as you see over here, there are about 40 sectors which where the work is already happening at this stage. But obviously, there is a time constraint, there is an expertise constraint, and there are a lot of challenges, which I'm sure GRI is actually facing as an organization. But I'm sure that, over a period of time, you will start seeing those sector standards also getting rolled out, so that people are then able to, take it up and then start reporting from their in their ESG journey per se. Now comes the moot point, the white elephant of this particular in this particular room. Yeah, even before we address that, why sector standards are important. I mean, one, it is tailored reporting, enhanced transparency, global comparability. Because if you look at India, I gave you an example, some investor looking at you, then obviously, he needs to understand. Obviously, he comes with a global mindset, right? So today, if you look at GRI, the statistics say that, at least 60 to 70%, if not more, companies worldwide have started actually, adopting GRI as their, let's say, go-to standard when it comes to reporting point of view. Very soon, I think, we are not very far from the time where you will start seeing, let's say, leaders of the organization speaking about the fact that because they ingrained their ESG strategies in their, let's say, daily operational basis, they're able to see a huge ROI. Yeah. Today, I know, again, I mean, some of you might actually chuckle at this statement of mine, but if you really understand the principles behind how ESG basically works, there will come a time where it will no longer be a regulatory push. It will be very voluntary. And today, I believe we are again in that transitionary stage where a lot of leaders are doing it voluntarily, despite the fact that it is not regulatorily applicable for them. And the reasons why they're doing it is because they understand the implications of it. As I said earlier, there's a huge data nexus. Where there's a data nexus, can you depend on people? The answer is no, because there is an error of omission, there is an error of commission, there are a lot of, let's say, errors data can always have, which is why automation is absolutely important. So in the short term, anybody who actually embarks on an ESG journey, obviously there will be a high element of, let's say, investment involved from an automation or a technological adoption point of view. But over a period of time, that is going to yield results, because you're going to develop your data pipelines, you're going to ensure that there is very least or minimal interference with from a human mindset interfering with and how or what quality of data you're trying to, let's say, tamper or manipulate with, right? So the manipulation, or let's say, maybe not manipulation, but let's say the again the errors might actually get minimized over a period of time. Talking of which, now one of the things that probably you would have in your mind is how to use the GRI sector standard. But I would also, some of you might also think that if, let's say, my client or myself, if I don't belong to, let's say, these 4 GRI sector standards, what do I do? Yeah. So that's the white elephant I was actually speaking about. We will come to that particular bit, maybe after this particular section. You will get to know that, how do you apply in case, let's say, the sector standards are not available today from an adoption point of view. Yeah. Number one, I think it goes without saying, right? You understand the purpose of the sector standards very clearly, correct? Now, why a certain sector is something that you need to actually, report upon, or why a certain guidance from a GRI point of view is needed in the first place, needs to be very clear, correct? Now, as I said earlier, now GRI, I would hate to call, or let's say I would hate to term it as a generic, let's say, framework, but it kind of follows a very inclusive mindset in terms of trying to cover all the sectors at some point of time, right? Today, if you look at it, there are a lot of, let's say, frameworks available, which is very specific to, let's say, what industry you belong to. Like, I think in the previous section, somebody had actually questioned and even written to me saying that I think they work for, or one of their customers is a very large, let's say, industry in India. Any specific reason why they have actually adopted, let's say, the CDP, which is, carbon disclosure project. Now, these frameworks are very specific to, let's say, which industry you actually work towards to. Now, first of all, organizations need to understand, whether there is a genuine purpose of, let's say, utilizing GRI, and what is the specific purpose of, we actually using this particular sector standard in the first place. The next is, once you actually overcome this particular bit, the next is saying that, which sector standard you actually belong to. Today, of course, we are talking about, let's say, 4 sector standards, which is actually available. Determine if your organization is actually falling in one of these GRI sector standards. If none of them are actually available, the universal standards and the topic standards are very generically laid out already. You can always refer to other industries and try to make sense out of them. As far as universal standard is concerned, it is pretty generic. I think it doesn't rely on any one particular industry. So it's a no-brainer that adoption of universal standard is no problem. Now, if your sector is not available, what you can do is you can always refer the nearest sector, right now, which is available, right? There are 4 industries for which you have, let's say, the sector standards very clearly published, topic standards very clearly published. Try to see that, if there is anything which is actually applicable in let's say, any of those, yeah, and then probably start reporting on your practices. Review the sector specific standards. Now, every organization knows what it is actually doing, right? Eventually, ESG reporting is all about, how are you identifying your material topics today, right? Even the topic standards, whether you belong to a hospitality or a retail, or mining or manufacturing or anything, your material topics is not going to be very different from, let's say, what other nearest industries are actually doing today, right? Now, all you need to do is, you need to have an inclusivity of sorts, where, let's say you have the stakeholder input, you understand where the business is actually heading towards to, you understand what is material for you, you understand how, let's say, all the fundamentals of ESG reporting from a GRI context is actually ticked, one after the other. So it's to that extent, it is as simple as that. But practically, I'm sure there are some challenges which we will see in the upcoming slides. Apply the GRI reporting process, because if you look at the reporting process, that is not going to change irrespective of which standard or which sector you actually pick up in a GRI context of things. Yeah. Irrespective of whichever sector you belong to today, the fact that there needs to be a stakeholder engagement, the fact that there needs to be a materiality assessment, the fact that there has to be a reporting doesn't change. You will still have to go through, let's say, these nuances in any case, correct? We have kind of adopted this for one of the industries for which we are actually implementing right now, who are very specific about GRI reporting, because the investors wanted them to report from a GRI context, yeah, from a GRI point of view. And we honestly, we didn't have, let's say, any sectors which was available at this point of time. But what we did, we followed, what you're seeing on the screen for their, let's say, betterment as well as their adoption. And we also picked up nuances of the other sectors. What are the other sectors speaking about? Because when you go through those particular sector standards, you kind of make sense that, why a certain sector speaks about a certain aspect when it comes to, let's say, mining, for example. Yeah. Mining is very, very labor intensive. So if you look at, let's say, the sector standards for, let's say, mining, you will see a barrage of disclosures and, let's say, norms that is actually required to be reported from a social consciousness point of view, right? And there is a reason behind it, right? Mining, as it is, obviously, it is one of the critical industries, number one. When I say critical from a, let's say, a human life point of view is concerned. So there are many aspects, which they have actually covered, which ensures that, you are reporting, let's say, the right element of matrices, so that you are covering all the nuances, and at the same time, you are kind of complying with, what a common man or an external person perusing your ESG report is going to look at, correct? And eventually for organizations today, they just have to take the boxes, saying that they are somebody who are very high in their, let's say, ESG reporting pedestal, somebody who is really high, who understands what GRI basically speaks about, or what GRI warrants them from a ESG reporting, or from a stakeholder engagement, or specifically from a materiality assessment point of view is actually concerned. So if you look at it, it's not really very difficult. But what is going to be a challenge always is the applicability side of it. And that is where, let's say, all of us have a role to play. If at all we are taking this as a full-time profession, I think the absolute understanding of, what, let's say, the standards speak about in theory needs to be well articulated in our mindsets. That's when you will be able to apply it in the real life. Yeah. Incorporate those in your sustainability reports. And eventually, now we have also seen that, quite a few, of course, this was, let's say, about a year back, when quite a few companies, even in India and globally, they were just reporting for the sake of it. I'm talking about the time where, there was no necessity of, let's say, assurance, assessment, or audit. For that matter, even today, I think a country like India is still in a very transient stage, right? It is slowly moving from, let's say, just an assurance to, let's say, getting into a full-blown audit stage. Yeah. And I'm given to understand that, from a BRSR point of view, SEBI is actually on the job as far as this is actually concerned. Now, some of them also do not incorporate, let's say, a very simple universal standards, into your scheme of things. Now, if you don't align with the basics, I think your ESG report is not complete. And if the report goes to, let's say, your external agencies or anybody who's looking at some sort of an assurance, they will fail miserably at the end of it, right? You may have certain qualifications saying that, when a sector is not available, which is where we have actually taken nuances from the other sector standards, which is actually available today, which is perfectly fine. But if you're not complying with the basics of, let's say, universal standards and the topic standards, I think that, the intent itself is actually, quite wanting in that particular case. Again, something like a GRI can always be well aligned with, let's say, BRSR, IFRS S1, S2, SASB, and CSRD. Now, I think organizations and enterprises are still finding their foot in terms of understanding what all of this is actually all about. I think, all of us over here, we carry this responsibility to go back and tell them that, you're not restricted only to comply with the GRI reporting, right? A GRI can very well align with, let's say, other frameworks as well. Going back to the same example of, I'm not sure. In fact, I don't want to name that particular industry, or that particular company. But again, when a carbon disclosure project is actually applicable to a certain industry, it doesn't stop the organizations to actually pick up that and actually start reporting, right? To that extent, even GRI is actually saying that, don't be handicapped because of us. We understand that we have today released only about 4 standards, but we are doing our best to ensure that, we do justice to all the standards when we are in a position to start issuing the guidance and guidelines for you. Which is where I think the whole thought process of, aligning a GRI reporting with other, let's say, specific frameworks becomes a lot more important, a lot more easy for the organizations as well. Because if you look at the whole context of GRI very clearly guides how you go about your ESG reporting itself, the whole 9 yards. The specific, let's say, sector-based reporting can always be taken up, or let's say the nuances can always be picked up from other, let's say, frameworks, which is more in tuned with, let's say, what the topic standards for this particular sector looks like, or for this particular company looks like. So to that extent, GRI doesn't restrict. You are free to actually adopt multiple, let's say, frameworks along with your reporting. And so that it becomes a little more meaningful, little more profound, and little more impactful in the larger scheme of things. It's very easy, what you see on the screen, but very difficult, when it comes to, let's say, apply this in your daily reporting process. How many companies really report transparently on even, let's say, financial matters? Now, we know there are multiple case studies that we have seen in the past, correct? ESG reporting is no different today, fortunately or unfortunately. Yeah. But having said that, I think the onus is again on ESG consultants to ensure that they guide the organizations to clearly explain the basis on how, let's say, material topics for a certain sector standard was actually applicable, and how did you arrive at that particular bit, right? Transparency is absolutely one of the fundamental principles of the context of GRI. highlight sector-specific impacts and strategies to address in the sustainability report itself. As I said, it is easier said than done, but I think organizations are waking up to this. They are trying to, let's say, get to a stage, where they are able to actually adopt this in a meaningful manner. Now comes a stage saying that, what do we do when a sector standard is not actually applicable? I think just before that, I think I missed something over here. One second here, just give me. Yeah, at this stage, I wanted to tell you how did we actually adopt whatever I told you just now from a case study point of view. I'm not naming the company, but I'm glad to give you some inputs about, when how did we go about, when it came to our, let's say, sector specific GRI implementation. So fortunately for us, when we now have a couple of, let's say, references, on the oil and gas as well as on the marine sector, what we did, from an approach point of view was that, it's very clear, right? I mean, if you look at the sector standards for, let's say, let's say oil and gas as well as marine. When I say marine, I'm talking about, let's say, aquaculture, fishing, agriculture. So there are some nuances over there which you can always pick it up. As far as oil and gas is concerned, straight away GR 11 gives you the whole nuances of, how, let's say, you're supposed to go about each of these topics that you're actually looking at over here. So from a materiality assessment point of view, we identified certain sector-specific GRI topics, conducted the whole materiality assessment in terms of identifying the stakeholders, setting up in internally as well as externally, having representatives defined in the ESG automation tool. We then started, shooting out questionnaires, got their responses. In fact, one of the biggest challenges you have at this particular stage is, how do you push your external as well as internal stakeholders to participate? Because that again, it's something you'll have to see how you are incentivizing them, how you are trying to get a response out of them, because there has to be something for them also to participate in this, right? So we conducted the materiality assessment. We got the topics from them. There were like about top 3 or 4 topics which eventually got identified at the top management, and we said that we are going behind these from an ESG reporting point of view. Now, once you identified those particular topics, the short-term mission, the long-term mission, the long taking decisions, thinking that okay, this is good for the business, but is it also equally good from a social and the governance side, from a environment and a social side of things, right? That's what eventually ESG reporting is actually all about, right? And fortunately for us, this customer was very cooperative, and I think their thought process was very clear. And again, they are somebody, who wanted to do this voluntarily at the start of the engagement, but by the time we finished, or in fact, finished 2 phases of the engagement, it kind of became a mandate of sorts, because of the geography where they were actually based in. Yeah. Next comes the data integration problem, right? Again, I think this is going to be a perennial issue, because organizations today, and just to digress a little bit, taking this particular company again as an example. Now, this company, I would say they are in the highest rung of, let's say, where the SMEs are today. Yeah. Now, typically what happens for a top SME today is like, let's say if this company existed for the last 2 or 3 decades, at the start of, let's say, their initial stages, you obviously would have resorted to an ERP implementation. You would have then said that, when you need, let's say, an HRMS system, because, your HRMS is not, your ERPs don't give a very solid, rigid, robust HR experience, right? So that's why you need a HRMS solution. Companies in a B2B segment, typically are always craving for B2B sales, right? That's where, let's say, a CRM solutioning becomes even more important, right? Then comes when you have, let's say, these many solutions already in place, you obviously are going to be, let's say, having bespoke applications like, time and attendance, IoT devices or IoT developments, or bespoke applications like some small time, let's say, procurement solution or a sales solution, something for which, your existing automation is not supporting. You get it done through a third-party engagement, or you subscribe to, let's say, a new age solution that is already there. What I'm trying to tell you over here is today, an enterprise is grappled with, multiple data sources. And please take it from me, today, even the smallest of the SMEs, that, let's say, you are privy to, we will easily have about, let's say, 5 to 15 to 20 data sources with them. Yeah. despite having these many data sources today, they still don't have an answer saying that, I mean, where are they capturing scope 1, scope 2, and for that matter, scope 3 emissions or a scope 3 related data, right? So these are the challenges, that let's say, practically today you will actually face, when you actually get onto the ground. Yeah. The next was the framework mapping itself. This, of course, for us became a little more easy because they were already on the oil and gas sector. So for us, it was just about picking up the nuances and start reporting on what, let's say GRI was actually speaking about. We developed a few custom KPIs in coordination with, let's say, what the companies were actually speaking about. We took the emissions, water consumption, workforce and safety and other stuff as a pretext and started reporting on that. And finally, our, let's say, dashboards and, I mean, because you have data, now you can always generate dashboards or reporting as long as data is there, correct? So we had data, so reporting becomes kind of easy for us over a period of time. Are we there today from a complete, let's say, ESG reporting point of view? If you ask me, a very honest answer in this particular forum, to my heart, no. Because your ESG journey is going to be a continuous process. You will have to start somewhere, and it's like chasing excellence, right? You can never say that you have reached the pinnacle of it. You will have to continuously keep improving as you keep going along, in terms of massaging the data, in terms of ensuring that, I mean, you are in sync with, what let's say GRI or the standards are actually all about. Yeah. What it gives, let's say, our, let's say, customer today is basically, I'm speaking specifically about oil and gas because the marine side, I mean, we still are a little early. To be very honest with you, we are still in phase 1. But then I would love to probably speak a couple of things about the marine industry as well, on what we are doing. Improve compliance, because they have a parent who's sitting and watching them saying that what is that you guys are actually doing. They also have an investor on board, I mean, who's sitting in, let's say, in overseas geographies, and who today, most of these large, let's say, VCs, P firms are giving more importance to ESG reports as compared to the financial reports. It's a very basic why. It's a very basic why for us to answer, because of the transparency, because of the clarity, because of the clean data, which, let's say, a subject like ESG is able to push and ensure that organizations are actually abiding by it. For the marine, let's say, side of, let's say, our experience, I think the what they were looking at, or what is actually now slowly evolving in this particular journey is like, they are able to have a better visibility of, let's say, how water gets managed, how fuel gets consumed, what sort of energy impact are they actually looking at from a consumption point of view, and then what sort of, let's say, workforce KPIs, because earlier it was existing but in disparate solutions, and today we are able to collate it, have algorithms work for them, and ensure that it is actually getting into the ESG platforms so that it gets converted into ESG metrics, from where you eventually generate your ESG reports in line with a standard like GRI or a framework like GRI. Yeah. At this stage, I would like to take a pause. Is the speed okay? I mean, is there anything that you want me to speak about or something? Chindu, Shweta madam, is this okay? Hello?
Yes, sir.
Okay, cool. I take it as a yes, yeah? I'm not sure if you said yes. Okay.
No, yes.
Okay, cool. Okay, now again, this is where I think I've been referring this to. I kind of preempted a little earlier, but pardon my enthusiasm over here. The white elephant in the room is like, what to do when a sector standard is not applicable. And we are facing this today. Honestly, we are facing this because there are quite a few organizations very similarly, same situation where either, let's say, regulatorily an organization is expected to actually comply with GRI standard reporting, or they want to, let's say, send it out to the world and to the investors at large that we are a company which is very high when it comes to, let's say, adoption, or let's say in aspects like ESG reporting, right? So the first thing, what did we do, or in fact, what should anybody do? Goes without saying, because today I think the perception is that if you don't have a sector standard, you can't, let's say, adopt ESG reporting at all, or you can't use GRI standards at all. That is not the case. As I told you earlier also, if there is a certain standard or a certain sector which is not actually covered, your universal standards and topic standards can always be aligned. All it will take is let's say, some sort of method in the madness and try to see that, how do we go about this particular journey, right? So default to the universal standard, use the standard universal guidelines, which GRI speaks about from a principles and disclosures point of view. Focus on materiality by identifying the ESG topics. It's not very difficult because I think the materiality assessment process itself is guiding a lot of organizations to identify, which topic is actually material for them. They might have 100 of topics, but they can always prioritize and say that, we are going behind, let's say, these 3, 4, 5, or 10 topics for this particular quarter, 6 months, or the next year, right? That's a great start. And then over a period of time, you will keep on actually, evolving over a period of time. You can always refer the topic standards. As I told you, there are topic standards generically available. There are topic standards available specific to the 4 current sectors we are actually speaking about. It goes without saying today that, if you look at topic standards, they very well align with the business. They very well align with what the sector itself actually means. Like, tomorrow, if there is a sector specific, let's say, guideline or disclosure for retail, for example, it is the topic standards are going to very specifically speak about, what the challenges in retail is actually all about. So to that extent, to think, to preempt and to say that, this is what, let's say, we should actually report is not a great deal. In fact, if you ask me if there are no sector standards, it's very easy today to actually, report, because I'm not saying you can report anything and everything today, but you can always reference and try to see that, what other topic standards or what other sector specific topic standards are actually, speaking about, and how do you go about, that particular reporting parameter. Conducting a materiality assessment goes without saying. Even if you don't have it, I've seen a lot of companies shying away from conducting a materiality assessment because it involves a lot of work, because it involves sending out questionnaires, conducting interviews, taking honest feedback. And again, it's like, not many organizations, even if they conduct materiality assessment, uh, are taking the feedback in a right zest, right? Now, I understand it may not be difficult. It's like, pointing fingers at something which is not working. But honestly, if you ask me, if I were the enterprise, obviously that is what you want to know today, right? You want to know what is the area of improvement, what is that concerns, let's say, an external agency today, what is that they feel that, I'm not actually complying with, what is their thought process about me as an organization, from an environment, from a economic prosperity, from a social consciousness point of view. Because I might be sitting in a cocoon called my own cabin or my own company without really understanding what the perception is from an external point of view. And this is a great tool. This is a great process from an ESG reporting perspective where, I get a perspective, because an enterprise cannot function on its own, right? It can thrive, it can function only if it has got a great supply chain mechanism from a product or a services point of view, and only if it has got a great customer relationship management. And the customer relationship will only swell over a period of time if you are able to add value to your customers, correct? If you don't do that, then obviously the customer is not going to be really happy about, whatever you do. Yeah. Now, this is one of the ways, how, let's say, organizations are getting pushed to do it. But unfortunately, today also, I think it is very voluntarily in nature. Very few have really either understood or really they want to do it or don't do it because they have a bandwidth issue from a manpower point of view, is what I'm guessing at this point of time. And mind you, in the couple of case studies which I actually gave you, or let's say the other customers where we are actually working, there are quite a few customers who are telling us they don't want to do this particular bit, which in my opinion will not be the right strategy. Yeah. And we have kind of given a recommendation, but eventually that's what you can do, right? I believe over a period of time, they will actually start understanding the nuances. They will kind of decipher why this is actually required. And I think it will get to a stage where, it will become a norm of sorts, sorry. Explore cross-sector insights. I think I have been talking about this ever since we started speaking on this. Goes without saying, but again, there is a little thoda mehnat lagega. You will need, some sort of let's say, work that might be involved to actually understand what other sector are actually speaking about. Many organizations today are resorting to, let's say, employing ESG consultants as a part of their team. I think we are getting to a stage again in the next 5 years, if you look at it, In fact, 20 years back, a company never had a full-fledged IT department, correct? The whole evolution of, let's say, IT becoming a business facilitator over a period of time has taken, let's say, us, the humankind, to actually take some time, right, to actually absorb this. Today, when startups start functioning, I think the very first thing that they say is that, okay, what is our IT strategy? Which means there has to be somebody as a CTO who's sitting and trying to, let's say, guide the startup and say that, this is what you need to do right from day one from a IT automation point of view. I believe that, we are about, let's say, a few years away from that, but it'll get to a stage where, every organization, just like how they have CIOs backed by the full-fledged IT teams, you will have CSOs, which is, chief sustainability officers or sustainability specific leadership, who will have their full-fledged team, trying to do all of these things, because it is getting to that particular stage. A lot of organizations voluntarily have started doing it. If you go to platforms like LinkedIn, I think the whole push around, let's say, vacancies around, let's say, sustainability leadership, sustainability consulting within, let's say, large enterprises is increasing. You can look at the stats for yourself. What I'm trying to tell you over here is, today, maybe organizations don't have the bandwidth, and some of the organizations don't have the intent, but the rightful intent ones are seeking out help, are going to external, let's say, agencies, are trying to employ them, let's say, on a contractual basis, and trying to adopt, let's say, ESG automation, or some sort of an insights from one perspective or the other. So as I said, it goes without saying. So today, just because you don't have, let's say, the sector specific standards for any of your customers or for you yourself, you're free to learn, you're free to go. In fact, GRI offers a lot of courses as well, right? Where, for sector specific specialization, you can always pick up the nuances and try to say that, how that basically works. If it is one of your nearest sector, nothing like it. If not, maybe go through the complete 9 yards, try to understand, what each sector is speaking about. That will give you a texture in your mind, saying that, how, let's say, the standards are getting built. For all you know, what you will do today, for a sector which doesn't exist from a GRI perspective, you might comply eventually once the sector standards actually, get issued. Or maybe you can teach a thing or two, to GRI when you send out your report and say that, hey, this is what we have done. Let me know if it is right. I mean, there are all sorts of possibilities, right? I mean, possibilities are immense. Transparency and monitoring, absolutely essential. Again, quite a few companies, again, we are seeing in our scheme of things, they start this ESG reporting, but they eventually don't get onto the other side. They never cross the line. Simply because, somewhere they lose the sheen. They just want a marketing, let's say, I wouldn't say gimmickry, but yeah, they want a marketing tagline that, they are somebody who is very well focused from a sustainability point of view. But if you end up reporting something which is half truth, or if you end up reporting something which is not right, which is false, you do remember what it amounts to, right? It will amount to greenwashing, correct? Now, greenwashing increasingly is kind of becoming a an offense of sorts. A lot of, let's say, overseas geographies have started actually picking up this particular nuances, and they are trying to penalize the companies. And I'm given to understand in another year or so, you will see, let's say, CSRD specific, let's say, guidelines and frameworks are pushing enterprises with, let's say, large penalties and consequences. It's not there today, I think, but I think slowly we are getting there. And I think it is just a matter of, one geography, or let's say, one framework doing this. If there are benefits, obviously you will start seeing this, being adopted across other regions or other frameworks as well. I think we touched upon this. Nothing stops you from not going beyond GRI. Yeah. Again, it's a very wrong perception where if you adopt, let's say, a certain framework, this is not like your, what example can I give? This is not like your, let's say, depreciation calculation in your P&L, right? If you have, let's say, followed a fixed line or a fixed method of, let's say, having a depreciation calculation, you can either do this or you can do a written down value, correct? It doesn't work like that. ESG reporting can always, well complement by the usage of multiple frameworks. I completely understand, because, this again, goes back to the earlier point that we discussed on the manpower issues, on the bandwidth issues, on the intent issues. But having said that, this is what is available today for us, right? Now, you can always go beyond GRI. You can see how it basically complements the other frameworks like BRSR, SASB, IFRS, TCFD, or any other specific frameworks. And today, mind you, there are 600 frameworks which is actually available. Yeah. And that's a mind-boggling number. Uh, if there are frameworks which is actually available, which means, somebody is actually using and perusing it. All it takes is, some sort of an effort, some sort of a mehnat from our side, and ensure that, those are getting ingrained. And how do you stitch in your scheme of things? That's what, let's say, ESG reporting is eventually all about, because all frameworks eventually, are pushing you towards transparency, clean data, and they're also ensuring that there is some sort of standardization, so that the peer-to-peer comparison, the competitive benchmarks, as well as let's say your periodic comparative within your organizations. Because today, if you're actually publishing a report, I mean, obviously, you're not this is not something a one-time activity. You will have to keep doing it, year on year, correct? So which means you will have, let's say, comparatives with previous years, previous periods, previous quarters, and other stuff, right? In fact, today, there are also organizations where I have seen in their reports, they're talking about ESG forecasting. I'm not sure how many of you have really seen that. And some of them are also going a little further, in fact, a little farther, trying to do something what we call as a rolling forecast. Now, which is like, creating a bench line, creating a, let's say, baseline of sorts from an ESG budgeting point of view. Start, let's say, I mean, comparing with your actuals. Then month on month, quarter on quarter, you kind of tweak your baseline, come out with, let's say, a quarterly forecast versions, right? RF1, let's say, and then trying to see that, how this best aligns with, let's say, your ESG strategies, right? That is the maturity some of the large organizations really are actually exuding. And I think there will be a time where this will start percolating down the value chain, and people will start resorting to what this indeed looks like. Because again, let us not forget, the whole ESG reporting is built on a cyclical economical behavior, right? Today, if we as an organization don't follow ESG strategies, um, there is no way that a customer who we are actually trying to, let's say, cater to, will not actually conduct any sort of business with us, right? And today, large RFPs, large contracts have started speaking about it, saying that please define your immediate ESG strategies. Please define what is your customer or vendors ESG strategies. Pick up your top 5 vendors, pick up your top 5 customers, and tell us what is your ESG strategy. Now, if we fall in that top 5 category, and if you go and tell the customer, sorry, boss, I don't have anything from an ESG strategy, the customer is going to stop conducting business with us. He's going to go to somebody else, correct? So that is where, let's say, when it is all being indicated to, that is where we are today. And if the whole cyclical behavior becomes a norm, I think you will start seeing this becoming a reality over a period of time. Yeah. Which gets us to a very important topic called as materiality assessment in ESG reporting. I know all of us, come with the finance as well as, let's say, accounting mindset. The whole materiality, the word materiality right now from an ESG context is evolving very, very rapidly. I did use at the start of the conversation saying that, I mean, what double materiality is all about, right? Now, we as finance people or professionals, we do understand materiality or what materiality is. One of the basic fundamental accounting principle, with which we conduct, let's say, an accounting per se, right? In the ESG context, when the evolution actually started, when the whole thought process of, let's say, when how GRI looks at materiality assessment started, it was a little unilateral. Again, I'll be very honest, saying that, when how do you, let's say, internally try to do this? But now, over a period of time, the focus is very equal, where, let's say, you're trying to include people internally, trying your level best to include, let's say, people externally also. Going back to my example where it wasn't just an example, because we are seeing this a reality. There are customers coming to us saying that we are losing large contracts today because our vendors and customer do not have, let's say, any ESG strategies. We are losing, let's say, business today uh, because, let's say the immediate, let's say, customer to whom we are trying to bid for projects, they are saying that, you don't have any ESG strategy. Sorry, boss, we'll have to go to somebody else, right? So the very first step when it comes to, let's say, when establishing or saying that, you have some sort of an ESG strategy today, is where, let's say, materiality assessment slowly is pushing organizations, right? Now, simply put, what you basically do is, you define, you set up your internal as well as external stakeholders, and in the context of ESG, in the context of sustainability, um, even the lowest, let's say, people in the value chain. I'm not trying to demean anybody over here. I'm just trying to, probably tell you, let's say if you look at the organization structure, let's say a trainee who has actually joined the organization today, even he or she becomes important from a inclusivity point of view. The onus is on the organizations internally. How have you ensured your trainees, your housekeeping staff, anybody and everybody, your security guards for that matter? I mean, we in India have this thought process of, not really looking at them at a same pedestal as how you look at a white collared, let's say, professional today, right? Let's be very honest over here. But ESG reporting pushes organizations to ensure that, everybody has got to say one way or the other. That is the internal side of things. Externally, when you look at customers, when you look at bankers, when you look at any partners, when you look at casual laborers, like for, let's say, the delivery app providers, there are like thousands of, casual laborers today, right? Like today, cab service providers or, let's say, aggregators today, they don't employ people, right? I mean, you just download the app, uh, take the booking, go and, ferry the passenger around or deliver the food, end of it, get your commission, out you go, right? They also become a stakeholder. So anybody and everybody who is impacted by your business directly or indirectly need to be included in your, let's say, ESG journey today, right? Now, from a ESG context point of view, so once you have established your internal stakeholders as well as your external stakeholders, the whole purpose why you do this, you focus on resources for critical ESG topics. And how do you arrive at the ESG topics is not by your CEO telling you or your managing director telling you that, we need to go behind this. Or internally, let's say the mid leadership or the senior management or middle management coming out with this nuances or thought process saying that, no, this is what we need to do. No, it doesn't work that way. Yeah. For you to determine, let's say, what material topics are actually all about, you need to take feedback from all of these people. You need to take feedback from all the people that you have set up in your system or in your processes as internal as well as external stakeholders. Why this is done? This is to enhance transparency and accountability, because there is a great level of inclusivity then an organization is trying to, let's say, exude, correct? From a organizational existence point of view. Align your ESG strategy with what your stakeholders actually want you to do. Again, external and internal both put together. Yeah. Because traditionally, the word stakeholder, all of us, when before ESG came into the picture, let's be again very honest, we always used to construe this, one, either, let's say, your immediate shareholders or the owners of the company, or let's say, some of the internal, some of the team members who drive or who are key in the overall business decision making point of view, right? But that is being done away with. Stakeholder is becoming or assuming an absolute importance in the whole ESG context, specifically from a materiality assessment process point of view. Now, the importance of materiality in ESG reporting, I think partly we did see earlier. One is the focus and efficiency. You can prioritize the issues, taking into consideration what everyone is speaking about. They say perception is bigger than reality, right? Now, you don't want to live in illusion, correct? You don't want to live with people's perceptions about you. You want hard facts. You want to know that, what is your concern? What should I actually do to actually improve? And organizations need to keep evolving over a period of time, right? So this is one. Second is a great level of, let's say, inclusivity by ensuring that, there is a very high level of stakeholder engagement. This is one of the primary factors when it comes to, let's say, how you conduct your ESG reporting today. A big level of, let's say, risk management. When I talk about risk management, it is expected that the responses that you actually get from all of your stakeholders, you are able to identify, let's say, what sort of risks the business actually possesses, and what or who better than your customers talking about your products and services, for example, correct? Similarly, when you involve your vendors, now, is the vendor really happy with the way you are actually conducting your supply chain mechanism today? Yeah. Because in today's world, it is not just the customer who is important. The vendor is equally, or the suppliers are equally important as well, correct? I'm just giving some examples over here. Yeah. Regulatory compliance, eventually it meets the frameworks that you are actually resorting to. Most of the frameworks today are pushing organizations to, let's say, adhere to, let's say, the concept of materiality. You talk about CSRD, you talk about GRI. These global standards are actually pushing organizations to ensure that there is one way or the other, some sort of, let's say, method in the madness as far as ESG reporting is concerned. Just give me a sec. I'll just plug in my charger. Sorry about that. Yeah, the steps. I mean, I would love to spend about let's say a couple of minutes on this particular topic, because a couple of people did actually write to me in the last previous session saying that we couldn't, or we didn't cover much when it came to what steps do you actually resort to when it comes to materiality assessment. Yeah. Now, identification of relevant topics, which is what we do from a materiality assessment point of view, using, let's say, frameworks like GRI, SASB, or industry specific guidelines. You can always then consider how the sector trends have been actually progressing, because one of the things that we are noticing today is that when the lot of these, let's say, ESG enthusiasts are actually relying on, let's say, past, let's say, sector standards or guidelines or guidances which were actually issued. Basically, to simply put, they're not really updated. Now, if you're not really updated, you will end up probably giving a wrong consulting to your customer, or the customer himself might actually do something which is absolutely wrong over here. Yeah. Engage stakeholders. I think we spoke really much about it. Surveys, interviews, workshops, gather stakeholder insights. Although I told you that we need to send out, let's say, questionnaires and conduct interviews and other stuff, I'm also seeing increasingly a lot of organizations are actually putting the stakeholders in a let's say in a lunch meet in a let's say 5-star hotel, and probably talking about themselves, speaking about this, and trying to get a first-hand input of sorts. That kind of fast tracks, let's say, the whole materiality assessment process. Otherwise, it's like you send out an email today saying that I mean, there are about 20 questions, please respond to it. Again, put your hands to your heart. How many people realistically, will actually do that, right? Because time is for sure, important for all of them, right? But I think by the time they actually understand this, I think there's still some time that, people will realize, why this is actually important, one, for them, for their organizations, as well as the other organizations. Prioritize the topics. You might get hundreds of responses. Can you go behind each of them? The answer is no, which is why you will have to prioritize, let's say, with which topics you want to pick up in the short term, which topics you want to pick up on the long term, because you can't really go behind everything, right? It's an evolution of sorts. Some of the organizations also today have a 5-year roadmap of sorts, where they say that after 5 years, this is where we see from an ESG adoption point of view. Yeah. If you're using automation tools in your scheme of things, you can always create a materiality matrix. It's like a quadrant which very beautifully grades the importance of let's say topics, and that will then help you and say that how you are actually going about in terms of prioritizing the topics with which you need to go about from materiality assessment point of view. Validate the findings. Although I would say, let's say, the accountability lies on the top management in every organization from a transparency accountability point of view. But I think the responsibility lies with, let's say, everybody who's involved in this particular process, right? So it's always important for them to, validate these particular results with the senior managements, with the stakeholders again, and trying to see that, is it really making sense in terms of, what we are trying to do? Because today, the other challenge that, I have seen organizations are facing is, how many of them are truthfully responding to those questionnaires, right? That again is a challenge, which is the veracity, or let's say the whole authenticity of the data. of the responses that, let's say one is actually getting from multiple stakeholders. I'm talking about specifically the external ones. Internal, at least, because you are a part of the organization, there is a certain fear psychosis. Although I wouldn't want to use the word fear psychosis, but that you belong to your, let's say, organization. There would be some sort of an authenticity, because there is always this maker checker, who is actually looking at, what sort of responses you are giving internally, right? Externally, there always becomes a challenge. So the quality of, let's say, responses that you get today, I think it will be of a same challenge of, what, let's say, scope 3 emissions look like today, right? In terms of, how you get the data itself. Once you get this, it's absolutely important that, how you integrate your ESG strategies and report, right? Eventually have, if you look at, let's say, about 2 to 3 years back, companies who have consistently been reporting on their ESG strategies and ESG reporting, back then the ESG report would say something else. Their financial reports, as well as, let's say, the chairman's note, or let's say their decisions or their thought process, their view ahead, their roadmap would speak some completely different. Now, increasingly, because, let's say, the nooses are actually tightening and frameworks are becoming a little more adaptive and adaptive, I'm seeing that, a lot of, let's say, organizations are trying to walk the talk, if not actually walking the talk, because, I think the push is real, and they realize that, if I ingrain my ESG strategies to every decision that I'm actually trying to make or trying to take for the organization, I'm sending out a very clear message saying that, I'm somebody who really wants to walk the talk over here, right? So eventually, the onus is on the organizations to ensure that, whatever strategy that they take, whatever decision that they actually make from their organizational context point of view, needs to needs to smell of, let's say, ESG strategies. Yeah, that is where the whole, let's say, landscape is actually, being directed or driven towards to. I've just taken a screenshot of, let's say, a materiality assessment that we actually did, and how, let's say, senior leadership then eventually looked at it and said that, how are we supposed to look at it? Like, greenhouse gas emissions goes without saying, like, for the stakeholders, is it high? It is high. What is the impact on the business? It is high as well. So it is something which is of a high or a top priority. Diversity and inclusion, from a stakeholder point of view, it is very medium. But this particular organization, I'm again speaking about an industry which is very labor intensive, right? So the business on, as far as the impact, the impact on the business is concerned, it is absolutely high. Yeah. Similarly, if you look at, let's say, the others, where you need to suss it out, you need to try and see that, what is important for you, what is important for the business, what is important from a stakeholder's perspective, and then take a decision. Now, these decisions, if you have, let's say, the right set of ESG automation tools, today they are capable of, giving you this. And obviously, let's say there are algorithms at work. The more data that you feed to these automation tools, you will start seeing a better results. But as of now, the onus is now very manual, the process, because uh, it takes, let's say, all the important stakeholders or dignitaries of an organization to sit down and see that, okay, community management, the stakeholder says that, it is very low, but we feel that, the impact on business is a little medium. So should we prioritize it? We'll have to see how we go about. Finally, how organizations are arriving at, let's say, material topics today is, they might say that, what is high for both the aspects becomes the top, let's say, weightage, or, weighted, let's say, topic for us to go behind. Or they might have a skewed view of, how things basically work from a ESG reporting point of view. I'm just giving an example over here. But more or less, this is how they're actually seeing. And I thought it was important because, we're already in the scheme of things. I just wanted to share saying that, this is how some of the clients and some of the organizations are looking at from a material or a material topics point of view is actually concerned. Yeah, I hope I'm making sense. We can take questions. I think we have good time today. It's about 12:15 or so. I got a few more slides, and then I think we are good for a Q&A. Yeah. Moving on, what are we seeing next? Yeah, the ESG reporting and disclosure. This again was a very well thought out topic, and I think we should applaud SRSB as well as I see AI to think about, I mean, let's say this particular issue, because you've done everything now. Yeah, you have understood the standards. Now what next? I mean, the next is obviously, putting, let's say, pen to the paper and try to make some sense out of the data that is actually coming out uh, from your ESG scheme of things, right? Which is where ESG reporting becomes absolutely important and the disclosures become equally important as well, right? But before that, I think I also thought that, I mean, for some of you who haven't attended, let's say, the previous session, I know this might sound very technical, but it's a very beautiful subject. I would urge that, if you get a chance, please revisit, let's say, the earlier videos, or please do your own research so that, you understand the nuances of, what we are trying to talk about here in this particular session. The very first thing, when you look at, let's say, when drafting your ESG reports, are you following the core principles of GRI over here? Because I'm keeping it very specific from a GRI context point of view. Yeah. Identify what's relevant and what's significant from a materiality perspective. What sort of stakeholder inclusiveness have you done? Have you really ensured that, if there are, let's say, 100 groups of stakeholders, have all of them had a say in your, let's say, ESG materiality topic journey? Is something, the onus is on the organizations. What is the sustainability context? Yeah, I mean, why in the first place this is being done is absolutely important. Now, the senior leadership, the core, let's say, stakeholders, all of them need to realize, all of them need to understand what is that they're trying to do over here. You can't do just something or somebody is actually, trying to tell you, right? I understand there is a competitive landscaping push. Today, if let's say a Pizza Hut is doing something, Domino's is automatically following suit. If Coke is following or doing something, Pepsi will have to do something, right? That's a good example of competitive landscape. The second aspect is voluntarily, right? There are a lot of large organizations who have started doing this from a voluntarily point of view because they see value in the whole ESG reporting perspective. The third is the regulatory push, which is real now, right? Now, everybody, let's say at least in India, SEBI has already mandated the top 1,000 companies to start, let's say, the ESG reporting, and they have started doing this. But how authentic, how transparent, that waits to be seen over a period of time. Once they go through a full audit, not just an assurance, right? Talking about assurance, we are going to speak about assurance in some time. So the sustainability context becomes absolutely important. Having a completeness, because this actually again reminds me of one of a recent customer case. I think this happened in last quarter. So they basically, I mean, they're a listed company. So they have, let's say, a quarterly reporting, which needs to go out to the exchanges, right? So they signed up with us, in the month of September, the first week of September. And they tried pushing us and said that, when we need to have, let's say, the complete set of report by end of the month. I said, why? So he said, because, we need to publish it, because we need to send it to SEBI. We need to send it to, let's say, XYZ other this thing. I said, okay, fine. And do you have the data? The answer was yes. So we send out, let's say, questionnaires. We send out, let's say, all sorts of templates, walk them through the application. Till today, we don't have the data. Yeah. That is where the problem lies today. So if your, let's say, report is not complete from all data perspective, you cannot publish your report. No assurance provider is going to put their, let's say, pen on paper and say that, wow, what a report this is. This is not going to happen for sure. So which is why, although there are other core principles, one of the core principles that, let's say all of us will need to follow or guide the companies is, the principle of completeness. And that will happen only when the data journey is complete in all perspective. This cannot be phased out and said that, I'm going to do like, for environment, I'm going to report now. For social, I'm going to report now. For the governance, I'm going to report in the next quarter. It's not going to work. So, which is where, organizations need to realize this. The whole aspect about completeness is absolutely essential. Very, very important from a GRI context point of things. Yeah. How do you structure your report? Goes without saying. I mean, you need to have, let's say, a very clear understanding, have clear sections around, let's say, introduction, governance, environment, social, specifically on the economic prosperity of your organization. I'm using the word economic prosperity because every organization obviously is here to, let's say, flourish, to tell everybody that, yes, we are making profits, but not at the cost of, we impacting the planet
and not at the cost of, we impacting the people side of things. That's where environment and social come into the picture. Many organizations today are failing to integrate, let's say the qualitative and the quantitative disclosures. This is where it again comes back to the fact that, I mean, how well are you or your organization walking the talk, right? Your ESG strategies, your chairman's note, your MD's note can be reeking of great English, but today consumers are actually seeing it through. Now, if that note doesn't engrain with the following ESG report, which you are about to publish, this is going to impact you at some levels, right? One way or the other. Again, it goes back to the assurance provider or the auditor who is not going to really sign and say that, this is not somewhere aligning. You're saying something from a strategy point of view, but this is not aligning with, what you're trying to publish from a data or from a reporting perspective is actually concerned. Yeah. So integrating qualitative and quantitative disclosure is absolutely important. Today, if you ask me, the challenge is immense on both the aspects. Qualitative, people are very ambitious. We can write great English, correct? But somebody has to, take a step back and see, is this real? What I'm trying to say over here is, am I being truthful? Is the organization being absolutely truthful in terms of what they're trying to do? Quantitative, needless to say, is about data, right? So if you don't have data, you will have to take into consideration, those aspects of where you are actually sourcing this particular data and ensuring that, you kind of merge with the qualitative aspects of how ESG reporting is actually then updated or rather mandated. Yeah. Maintaining clarity, transparency, and balance. Again, it goes back to our completeness principle. And again, I'm not like, reinventing the wheels over here. This is what GRI speaks about. I've taken all of this, from what GRI website actually speaks about. Yeah, from a ESG report compilation point of view is actually concerned. The key steps, again, let's deep dive a little more. Now, understanding the context becomes absolutely important. You need to identify the ESG risks, the opportunities, the data that it actually, backs up with, what sort of, let's say, things that you're trying to publish over here, right? Next comes, you need to very clearly identify, clearly publish who are the stakeholders and what really matters to them. And I think we have spoken enough about this particular aspect. Materiality assessment, how did you conduct the process? How or what material topics were relevant to your business stakeholders, which is internal as well as external? That becomes absolutely essential and important, which then leads to, what sort of processes that you actually resort to when it comes to data collection and validation. Because publishing data is one, and that is where, let's say, auditors come into the picture, right? Because, somebody has to say that, this data indeed is right. Because today, an ESG audit is not just about, let's say, somebody saying that, yes, you have complied with all the frameworks. Yes, you have complied with all the disclosures. Yes, you have complied with all the processes that a certain framework speaks about. No, it also means that, somebody has to verify that, the data is actually accurate. Yeah, it cannot just be an approximate data at the end of it, right? Because again, as I told you, it will amount to greenwashing, green rinsing, all sorts of, let's say, issues, which you will have in the future. Aligned with the GRI disclosures, there is a very clear GRI content index. If you look at any, let's say, international ESG report, why international? In fact, you can actually go and take a look at the ICICI's report. I think in one of the sessions we did discuss that, and I had actually opened up that particular report for all of you, but I still urge, please go back, take a look at that. In fact, you can go and take a look at, Hindustan Zinc or let's say Vedanta's ESG report, very beautifully drafted, where, let's say they have very clearly given all the disclosures in line with BRSR, because it's region or let's say semi-specific from an India geography point of view. But their disclosures also well aligns with what, let's say, GRI speaks about. So there's a very clear content index, which is very beautifully reconciled, saying that, let's say the GRI table of index, how it complies with, or let's say how it refers to the BRSR scheme of things, and in which page this basically refers to. It is very beautifully done. Somebody who's really interested, please spend some time. You will understand that, and what or how, let's say, reports needs to be reflected. Draft and review the report, and eventually, the report needs to be accurate, clear. It needs to go to assurance providers, auditors, who can then look at it and try to say that, these are the qualifications. If there is no qualifications, well and good. But in today's times, I will be a little disappointed if there are no qualifications, because that is where we are, because the ESG nuances and ESG reporting is still evolving with us being in the pedestal over here. I also thought that, maybe we should cover, let's say, some of the best practices when it comes to disclosure. Goes without saying again, because, leveraging, let's say, the GRI content index is the easiest. If you look at GRI, the content index is very, very clearly laid out. You can even, in some of the areas which is not applicable for you or your clients, you can say it is not applicable, but you need to give reasons why we are saying, what we are saying, right? I mean, those are, let's say, some more deeper nuances of, how you use or peruse, let's say, the content index. Disclosing the impacts across, let's say, 1, 2, and 3. If, let's say, for some reason, the data is not still available for, let's say, scope 3. I'm giving an example of scope 3 because scope 1 and scope 2 is relatively easier because it is internal. You can still compile it. You can ensure there is a clear strategy in terms of, how you are actually resorting to it. As far as scope 3 is actually concerned, the whole world is grappling. COP28, COP29, I think, all of the world leaders, they still are trying to find a way that, how do you ensure today, if Indigo is actually publishing that, when you are emitting a certain carbon emissions, right, on a per seat basis, how do you take that particular data, number one? How do you know this data is accurate, right? That is where the scope 3 challenge comes into the picture. Yeah. Using case studies and visuals for better storytelling. Again, if you look at those ICICI and Vedanta's reports, very beautifully, let's say the graphs as well as, numbers have been actually, published. You can take a look at it. You can take a look at Mahindra's report or Tata's report as well. We are evolving from a landscaping point of view. Organizations are really improving the way they are publishing their ESG reports today. Not just GRI, and I think we spoke quite extensively on this. You can always align with, let's say, complementary frameworks. Try to see that, if something which is not available in the GRI context of things like sector standards for your sector, you can always try to see how you can marry that particular framework to, something which is a little more relative, right? Because there is no one true solution for the problem that we are facing today, right? So these are some of the options, or these are some of the, let's say, what we have on the table to pick and choose and embark on our ESG journey. I know this is a little textual, but honestly, I was struggling this morning when I was actually putting this particular slide. This slide basically, let me summarize this for you because I don't want to freak you out. You can always, read it when you have time or when you get this particular slide at your perusal. Yeah. Honestly, even I hate, let's say, this much English, in a PowerPoint presentation, but I thought it was important to be told. Yeah. Now we have discussed about the good side of what GRI is, how reporting works, how sector standards are actually, immensely helping people and other stuff. But there are some practical challenges today, right? How do we go about, or, what do we do, or what are the shortcomings today, for somebody who is actually resorting to GRI reporting? Today, I'm able to actually put this for you, thanks to, let's say, our journey this far. And I thought it was important to actually, share this learning so that, you can try and see how you can actually do it. So what we did over here was, we identified a few shortfalls or a pitfall. We described what exactly this is, and we also tried to, come out with, let's say, some of the solutions. Either we are adopting or we are trying to adopt at some stage or the other. Yeah. One of the first things today, if you look at it, completely overlooking the sector standards. Now, if you don't have a certain sector standard, as I said, you can always look at the alternative ones or the near ones. I would urge all of you, even if, let's say, you don't belong to that particular sector, go through those 4 sector standards, which will kind of give you a texture on how this basically works. I've also seen organizations, despite belonging to an oil and gas, they still don't resort to, let's say, let's say GRI sector standard 11 for, let's say, oil basically talks about, right? So that is a challenge number one. Very high level or a superficial materiality assessment just for the sake of it, right? Now, I also believe, I understand the challenges behind this, but at the end of it, if this is not done properly, your whole ESG journey will not be complete. And somewhere, the whole investment in terms of time, energy, cost, and everything will not yield the results that the organizations are actually looking at today, right? So which is where I think there has to be a greater awareness. There has to be processes where, this is actually going down the value chain. everybody understands the need for it and the why and the what side of it, right? Ignoring the core GRI standards, I think somewhere it is actually linked to what we spoke about earlier. Incomplete data reporting, it is increasingly a challenge. And today, honestly, do I have an answer? The answer is no. I think it is going to be a perennial issue. We'll have to see how organizations actually evolve. And today, the challenges that we face or are facing is incomplete, inconsistent data, unverifiable data. So we don't know how this basically works, correct? Neglecting scope 3 emissions. We've also seen quite a few people saying that, we have data for scope 1 and scope 2. We'll see how scope 3 basically needs to work. That's a wrong approach, because you got to start somewhere or the other, one way or the other. If you don't do this, I think, by the time you try to probably address this particular problem, it's going to be a tad late at some point of time, right? Very important, using, let's say, outdated GRI guidance. The frameworks and the guidance and the disclosures are very fast evolving. Yeah. So which is why it is important for all of us to stay in tune, stay in line with, what, let's say, this is actually all about. And how do you, let's say, overcome this over a period of time? How do you do this? By regularly, let's say, resorting to what GRI publishes, by regularly, let's say, having your core team taking up the certifications, or yourself taking up the certification, so that you are in tune with, what is actually happening. And GRI conducts a lot of these workshops, a lot of these, let's say, online webinars, paid webinars, some unpaid webinars, which you can actually always go subscribe and see what basically this happens. And they are very, very active on LinkedIn. So you can always see that, what kind of disclosures or white papers are actually coming out from their desk. Ignoring stakeholder inclusiveness, I think we discussed about it. Lack of external validation. I think this will get to our next section on the assurance side of things. We talk about it. Today, unfortunately, the biggest issue that we face as ESG consultants today is that we have very limited access to, let's say, a peer benchmarking. Although I'm telling you, let's say, an example of a Coke or a Pepsi, these are probably, let's say, large examples. So, maybe the reports are available, but that's it, right? You don't know anything beyond that. So the benchmarking, is actually becoming a challenge. Now, the competitive landscape, people are talking about saying that, I'm doing it. We are a very high on this ESG value chain, but how are they doing it? What is actually happening? What sort of data is getting perused? There is very limited availability or limited understanding on that particular side. Manual reporting processes, again, the whole ESG journey will actually eventually push organizations to adopt a very high level of digitization. So if they don't resort to it, there is going to be a challenge. Yeah. Lastly, I beg your pardon, because I think it kind of overlapped with my footer over here. I hope you're able to see the last line, which is lack of internal expertise. This is again becoming a very, very fast problem. The senior leadership wants to embark on this particular journey, but they don't have bandwidth. Even if they have the bandwidth, what they're trying to do is, today I've seen organizations, giving this responsibility to the compliance and the legal team, or it is going to the finance team. But both these teams have their own, let's say, challenges, right? They need to take care of the day-to-day finance and operations. Legal and compliance, again, the same problem, right? So the lack of internal expertise is also causing this particular issue, because eventually, even if customer comes to you and seeks your ESG consulting experience, internally, this needs to develop over a period of time. If this doesn't happen, I think they perennially are going to be, let's say, sucked up or be in that particular cocoon and will not be able to come out of, what they are trying to do. I'll quickly cover this particular bit as well. And before we move to the assurance side, yeah, we've got about 15 minutes or so, and then we take the Q&A. I see there are a lot of questions coming in. Interesting. So what we are trying to talk about in this particular slide is the data challenges. I think we covered very extensively in the previous, let's say, sessions, but nevertheless, for posterity, identification of sector-specific data requirements. I mean, it is a big challenge today. Either you don't have data sources itself, or you don't know what sort of data points or where to actually, get this from. Inconsistent data collection process. This is where it is kind of, loosely also linked to the automation side of things. If you don't have, let's say, a very standard way of, let's say, data collection, which eventually will lead to an automation conversation, it is going to be a challenge over a period of time. Data granularity, a big challenge. Data integration across various scopes, which is 1, 2, and 3, is again a big problem of sorts. Are we getting a real-time data? The answer is no. We'll have to wait till the time, let's say, when somebody feeds you with this particular data, correct? Which means there is a huge dependency on the business in itself. And by the time, let's say, this evolves, I think we still have to, cross the whole 9 yards at some point of time. Large data volumes is again a challenge because again, in the first place, where are you housing this? Even if you're housing this in your ERPs or, let's say Excel spreadsheets, these then needs to be converted into ESG matrices. So again, if automation tools are not being invested upon, then you are going to have this challenge perennially in any case. Data quality, data accuracy, I think by now all of us have actually understood, why this is becoming a problem. Balancing quantitative and qualitative data, we spoke about this some time back. Limited technology adoption or no technology adoption. Even today, I think some of the SMEs are of the opinion that they don't need data. I am privy to quite a few public listed companies today, large companies, who are actually doing 1,000+ crores of actually turnover. They are resorting to Excel spreadsheets for their ESG reporting. Is this going to work over a period of time? I can tell you, definitely no. If you don't have a technology adoption or if you don't have strategies towards it, it is going to be a challenge. I'm not saying because I come from that particular background, I'm not trying to sell myself over here. Please don't take it that way. You can do your independent research. You can see that, what let's say, enterprises are actually grappled with or where this landscape is realistically, let's say, there today from a adoption point of view. Lastly, the regulatory and the framework alignment, because again, I feel that not everybody has really understood the BRSR, let's say from a ESG context in India, really well, because they are just doing it for the namesake, and it is not going to really, let's say, help organizations to actually report over a period of time. In India, it is let's say BRSR, but globally, if you look at it, GRI. So again, it all comes back to the fact that what sort of awareness you have and how well the data is actually supported in your scheme of things. Yeah. Pardon me, it is a little textual, but I thought it was important for all of us to understand that what actually is happening on the ground. Yeah, because it is great to speak about it. It is great to actually publish a lot of these LinkedIn posts and say that, oh, this ESG, that ESG. But these are some of the problems today, as far as one from a reporting side is concerned, second from a data side is actually concerned. And although I think I have tailored it to, let's say, what our topic is today from a GRI sector standards point of view is concerned, take it from me, this is going to be standard even from a BRSR or any other framework is actually concerned. Yeah. Lastly, I'll just quickly run you through the assurance side of things on reporting. Now, I know the word assurance is actually construed very differently by different set of, let's say, consumers. When I'm talking about consumers, I'm talking about all of us in this particular forum, right? Now, very simply put, what is assurance? It's like, a simple maker and checker concept, which can be internal, which can be external, right? Now, somebody makes it, somebody has got to check it. Is internal assurance good enough? And how you define assurance is what is going to be important from an ESG scheme of things. Today, if you are looking at a very simplified assurance, that's pretty easy, right? I mean, I compile a report, I send it out to, let's say, my bosses internally, they certify and say everything is fine. That is the simplest example of assurance. But is it really what the organizations should be doing? The answer is no, right? I mean, I think we know, all of us, in our heart, it needs to be a little beyond. And I think today, the whole push by SEBI, the whole push by MCA, the whole, let's say, evolution of BRSR, I think we are in that transient phase, or let's say a transition phase, in my opinion, where it is slowly, let's say, getting from an assurance to, let's say, becoming an assessment and audit of sorts, a full-blown audit of sorts, where you seek external auditors to come and actually, and give their opinion about, how this report basically looks like. Now, before that, some of the, let's say, amateurs or let's say, novices who we have in the room today, why assurance matters. Why do you actually need an assurance in the first place, right? Now, number one, it enhances credibility, correct? Builds the stakeholder confidence. You know that the data that you're trying to publish, somebody has verified it, right? Somebody has said that yes, this is accurate. You can please go ahead, subject to, let's say, following qualifications, for example. It mitigates risks Imagine a situation if, let's say, you as an organization just publish, and there is a consumer who points out that there is an issue. He goes to LinkedIn, he goes to Instagram, he goes to Facebook and maligns your organization. It is like a staircase pitch, right? A staircase and an elevator pitch. Something like a reputation always, comes down using an elevator pitch. It takes years and years to build someone's reputation, correct? That is where, they say that, it takes a staircase pitch for somebody to build, let's say step by step, reputation over a period of years, right? Drives accountability, because if there is somebody who's checking this internally in the organization, somebody is responsible, somebody is accountable in that case. Very similar to, let's say, let's say your financial report audits and, let's say, assurance, that many of you would be embarking today, right? Supports decision making, needless to say. How assurance from a GRI reporting supports, or how it is important in the GRI context of things. One is a data validation, because very clearly, if you look at the topic standards today, very clearly it kind of elucidates, saying that, how, let's say, the data needs to be reported. Going back to the same oil and gas, let's say, industry, one of the topic that we had to report was, let's say, the labor engagement, their wellness, their OHS, which is, their organizational health and safety policies, for example. You just publishing it is not going to help. Now, after you publish it, one is the policy. Second is, what data do you capture from that policy and framework point of view? Third is, who is really validating that particular data that you have indeed given a complete and accurate set of reports. Now, this particular organization, what they eventually did, they hired specialist who understands this data specifically. I'm not talking this now purely from a GRI context point of view. There are organizations who are deep diving in this, taking this with absolute utmost importance and trying to say that, this data validation is absolutely important. The ESG assurance side of things, or ESG audit side of things, always looks at the framework compliance, correct? There has to be a data accuracy also. Now, one of the things an auditor or an assurer from a GRI context is concerned also needs to verify that, when somebody has realistically validated this data. A simple, let's say, signature from an external agency will suffice or probably help, let's say, what we are trying to do over here. Next is the materiality review, ensures relevant topics reflect stakeholder expectations. There are organizations, who actually conduct materiality assessment, but they eventually publish, what they want to, which is absolutely wrong, which is absolutely unethical. And it is against the whole principle of ESG reporting, against the whole principle of GRI in itself, right? So the whole materiality review, somebody needs to verify and say that, this indeed has actually happened. A simple sample check will actually tell you the whole process has been followed, and XYZ stakeholder, externally and internally, indeed has contributed to this whole particular process. Process evaluation. Now, I've seen many of the companies, again, they don't give importance to, let's say, the process in itself. If the report is published, it speaks about the framework's language, there is data, signed, the report can be published. That is not how it needs to work, right? Ideally, the processes have to be evaluated as well. So it goes a little more deeper. If somebody is actually seeking an assurance externally or internally, saying that, how you are going ahead with the process evaluation. Lastly, the framework compliance in itself. Obviously, from somebody who is a ESG GRI, let's say, felicitated auditor, he is going to look at the frameworks and say that, okay, boss, you have actually complied. The disclosures are in sync. You're using, let's say, GRI 1, GRI 2, GRI 3, you are using all the standards, you're speaking that particular language. This, in my opinion, becomes a little more easier if the earlier three nuances are well taken care of. Yeah. Today, again, this is not a published information. This is based on my understanding of how, let's say, assurance is actually working today. I might be a little off guard over here, but I think I'm fairly right in whatever I'm trying to say over here. Now, one, there is limited assurance, where, let's say, internally you go to your bosses or your peers and say that, please, certify this. And are we good for this particular bit? Having said that, a limited assurance can always be external, but increasingly I'm seeing a lot of organizations internally, they have an internal audit team, who tries to actually do this and say that, this is fine or this is not fine. A reasonable assurance will partly involve internal as well as the external agencies, where you're trying to say that, when you give out a nuance of your ESG reporting journey and seek a assurance from them. Yeah. Lastly, a third-party verification is a full-blown, let's say, a little beyond just assurance. You're trying to seek and say that, I mean, please tell us, please certify us that, you are the expert over here. What we are doing right now is absolutely right, or are we not really doing what we have to? You all understand assurance much better than, what we do from an ESG context. I'm just trying to put, what, let's say, we are actually facing as ESG consultants today, and what, let's say, organizations globally as well as in India are actually trying to do. In fact, in India, I think not many are really complying with it. I hate to say this, but then I think it is still voluntary because the assurance has still not been made mandatory at this point of time. But as I said, there is a genuine push. I think, let's say in another quarter or so, we might hear from somebody like a SEBI. I'm given to understand they're already working on this, saying that, the assurance is absolutely mandatory for, let's say the organizations who are publishing ESG reports, right? You can't just publish, something which comes to your mind and say that, we can actually get away with it. I would like to deep dive in terms of, how, let's say, external assurance basically works. It obviously strengthens the stakeholder trust through independent validation and evaluation. The organization then becomes ready for something which is coming in the future, because an external auditor is obviously going to be a lot more prepared, because he or she will definitely be deep diving into this particular nuance. And if you have an existing relationship with somebody like them, he or she is going to advise, saying that, boss, there is a new, let's say, guideline or disclosure or a framework change which has actually come. You need to adopt that in your upcoming reports, and so on and so forth. The biggest challenge that we face today is that, the comparability. One is internal, and the second is, let's say, across industry segments as well. When I talk about internal, if you don't have a standardization of sorts, you cannot have a previous period comparatives, right? I told you, I gave an example of large organizations, what they're trying to do today. They basically are actually getting into a stage of, where they have a baseline for ESG budgeting. They then have ESG rolling forecasts, or let's say baseline for forecast, and then trying to change based on, any seasonality or any changes which has happened during the course of the month or during the course of the quarter. So you have an extreme paradigm over here where there is one set of enterprises or organization who are right up there. And then there are organizations who are still, trying to, let's say, climb up the baby steps and trying to say that, we are also, trying to aspire becoming organizations like yours. Demonstrates commitment to transparency and accountability, goes without saying, because once you say that, kisi aur ka thappa hai, somebody else has actually signed this particular report. I think, it goes without saying that, somebody who then peruses it, the first thing he's going to look at on the front page is that, when somebody has signed this and said that, yes, this indeed is a very qualitative and a genuine, authentic report which complies with, everything that an ESG reporting actually speaks about. So the action points for organizations from an assurance point of view: selection of, let's say, experts from this particular stream. Define the scope for assurance, material topics, KPIs, or report. Give a complete walkthrough of what is that you have actually done from a ESG reporting point of view, so that the auditor is able to understand the sustainability context, the reporting context, and the business context of things, right? Integrate the findings and recommendations into your reporting practices. Finally, transparently communicate assurance outcomes. This is no different to, let's say, how your financial reporting and audit basically takes place, right? The only thing which changes is the organizations need to look for ESG experts. Specifically, if you're talking about, let's say, GRI or BRSR over here, they need to be somebody, who understands how these two frameworks basically work. Otherwise, I think you are again going to somebody, who doesn't actually understand this. Now, those firms can always walk away saying that, this is not our purview, even after signing. So the onus is always on the organizations to ensure that, they sign up with the right set of people. The scope is well defined. They know what they are actually getting into, and trying to get the maximum out of it. Last, I'll just summarize. This is my last slide. What we discussed today basically was, let's say, the industry specific focus. We spoke about a couple of sectors where we are actually working. We also saw, if you don't have, let's say, specific sectors for reporting purposes, you can always use the nuances of, what universal standards speak about, what topic standards are actually looking like. You can go a step further, try to see that, what those 4 sectors are actually, talking from their context point of view. or you can look for, let's say other frameworks which can then be integrated with a GRI context of things. Yeah. Um, why we do this? Because streamlined reporting helps, let's say, stakeholder expectations. It also helps reduce mitigations or arrest mitigations over a period of time, ensures comparability, ensures that there's a lot of transparency in the way that you are actually reporting from an ESG context of things, aligned with global frameworks. Adoption of GRI also ensures that you are aligning with UN SDG, very important from a global context point of view, right? Eventually, we saw in the previous sessions that SDGs or the Sustainable Development Goals, those 17 goals are the pretext for ESG as a context today, right? And GRI is very well aligned with them. So if you do something or adopt, let's say GRI today, you're right there in your adoption pedestal. It also aligns with the Paris Agreement 2015, which specifically spoke about the climate actions and other stuff, and other GRI standards specific to, let's say, either your industry or aligning with some other industry. You are always free to do that. Impact focused reporting, as I said, at some point of time, I think we need to speak about the impact of double materiality from an ESG reporting point of view. The concept is evolving. I'm given to understand quite a few large universities have already started preparing, giving PhD courses on double materiality itself, because such is how, let's say, the whole concept of double materiality is actually evolving now. Now, gone are the days where organizations were looking only from a internal context. The whole context is now real from an external, let's say, an impact materiality point of view as well. Lastly, I think what was also important is that, in addressing the emerging ESG risks, GRI helps you to actually, ingrain your strategies and ensure that you're ready for something which is going to come in the future. As I told you, I'm an eternal, let's say, optimist who absolutely is sure that in the next few years you will see top leadership coming out and talking about how ESG strategies have started actually strengthening organizations, let's say cash flow positions, how it has actually started helping the return on investments, and how it is actually helping them not just staying a net zero positive company, but also, let's say, a cash positive company at the cost of not really impacting negatively, the planet and the people side of things. Yeah. With that, I'll probably close this session and open up the forum for Q&A. Thank you so much. I hope you saw value in this particular session. What additional technical qualification is useful for CA in this arena? As I said, I think if you're looking from an ESG context point of view, GRI offers quite a few certifications. Yeah, so you can definitely look at getting certified on GRI. It's a little technical to start with, so which is why if you don't understand the ESG context in itself, I would, because it is a little pricey. Yeah, I hope I'm allowed to say that. But what I recommend is that, there are a lot of online, let's say, courses in Udemy or any other platforms, which gives you a very good context about, what ESG is and what ESG reporting from a GRI context is. That is for a limited investment from your side. Once you understand that, I would urge that, you can always get certified on GRI, or, there are multiple, let's say, frameworks which is actually available, which you want to adopt. Mind you, the other thing you need to also have in your mind is whether you want to specialize in GRI or any other framework. So that's something you'll have to take into consideration. Will providing vehicle loans for fossil fuel power vehicles be considered scope 3 emissions? Absolutely, yes, sir. It will be, because see, anywhere you have a scope 3, when I say scope 3, let's say where an organization doesn't have control on data, yeah, you will be relying on a third party agency, right? So here clearly, you will rely on, let's say what the third party is giving it to you. So obviously anything which is third party and not internal qualifies for this particular definition. Does previous year data need to be reported in sector specific GRI reporting? Not really. If so, does the first year of adoption require 2 years of data? Not really, not really. But it is a good practice. It is absolutely a good practice. This is something we recommend to our customers as well, because trust me, in this particular journey, the first year data is not going to be is going to be more of an approximate, because it's a journey that you have actually started, right? Maybe in the first year you only reach 10% of where you want to be, but if you keep doing it, I think over a period of time, there will come a stage where, automatically this becomes a norm of sorts, where you start comparing the previous 2 years and other stuff and how it goes. Yeah. Which of the entities drive the GRI? GRI itself is an entity. It's called Global Reporting Initiative, headquartered in Netherlands, and yeah, they are an autonomous body, working and issuing frameworks after frameworks for different sectors. Only then with aligned frameworks in which different countries can happen. I'm not sure if my understanding is correct. I hope I've answered your question. I'm not sure. Maybe if you can write to me, I can probably, if I've not answered your question, pardon me, but I think, I have limited understanding of, what you're trying to say. But if you're saying which entities drive, I mean, GRI is being driven by Global Reporting Initiative, Netherlands and Europe. Yeah. How GRI challenges be coped up effectively for future economic development? We'll have to keep evolving. We'll have to keep evolving, try to answer, let's say, every challenge that is being thrown in earnest zest, with the right set of data, with clear transparency, and in all honesty. I know I'm talking too idealistic over here, but if you don't do that, you're not complying with, what, let's say, GRI is basically talking about, right? And eventually it is all about not just GRI, for that matter, any framework wants you to wants you to focus on defining or probably telling the outside world, how are you making, let's say, economic prosperity at the cost of not damaging the environment and the people side of things, right? So the only way that you can do is, taking the right decisions and ensuring every decision is measured from a ESG context of things. Yeah. How long does first time GRI sector specific reporting take? If already reporting under basic and topic standards, how much additional time? Sir, there is no definite, sir or madam, there is no definite, let's say, answer to this particular question. It all depends on the size of the company, isn't it? Now, if it is a single company, maybe you're looking at a limited data sets over here. If there are group of companies, because I've also seen quite a few, let's say, large organizations, they have taken, let's say if they have a group of 15 companies, for example, or 5 companies for that matter, they consolidate all the data, take it in the holding or in the ESG holding company, and then try to make sense of their ESG reporting. Yeah. So it all depends, what size you're looking at, whether you are somebody who's very high on the ESG pedestal automation point of view. If you're somebody who can, probably churn data in line with, what ESG, rather GRI reporting is actually asking you to do, then I think it can be faster. But definitely there is no, let's say, a shorter answer to this or a shorter timeline to this particular question. We understand that GRI 11 lists down all material topics for ESG oil and gas. What are your thoughts of code of conduct as material topic for this sector? How is it absolutely relevant? In fact, I'm also given to understand there is a new release which is actually coming up somewhere in Jan-Feb, because there are some areas, which I think customers have actually gone back and reported back and said that, this is the reality in terms of, how we are actually evolving in this particular sector. And that is the thing, right? Because eventually, even if you look at GRI 11, it was issued in a very recent time. And just like, how, let's say in our case, accounting standards, keep on getting updated, you will have a time where, this will keep on getting evolved. And there will be some areas, which will need some corrections or rectifications over a period of time. And in fact, it's a very good question, actually. This also happened very recently for the, I think GRI 12 or 13. Yeah, I think one of those happened to undergo a change of sorts. So I think there are continuous updates and white papers, which is getting released at this point of time. Yeah. If the sector is not present for any entity, will its GRI report statement of views be still called? Yes, sir. Absolutely. Fantastic question. For sure, it will be, because you're still using, I'm assuming that you're still using the GRI universal standard and the topic standards, right? And you will have to qualify your report somewhere or the other and say that this is what you have actually done. Yeah. Sindhu ma'am, Shweta ma'am, can I take all the questions? Is it okay? Do we have time or?
Yes, sir. Yes, sir.
You said yes. Okay. If the sector standard is not present, okay, we just covered this. Prioritizing of topics will be done on what basis? This will be done on the basis of, if you remember, I had showed you the table. You take all the feedbacks from your, let's say, stakeholders. both internal as well as external. Once you take that, you clearly chart it out and say that, if you have an automation tool in place, well and good. If not, you compile it and say that, how does it look? Basically, you want to narrow it down and say that, what are the topics, which is impacting the stakeholders, right? In fact, you can narrow it down and say internal stakeholders, impact on external stakeholders, and then you talk about the business impact, right? Obviously, the internal stakeholders will look from a different perspective. External stakeholders have a different point of view. And then when you look at business is going to be, let's say, very specific to their, let's say, rightful things, right? Like, making profits, for example, correct? And they're not wrong in doing that because it's not an NGO at the end of it, correct? So the sustainability teams or the leadership teams, then they will have to look at it and see, give weightage to the rightful topics and document it very clearly why they have actually picked up, let's say, 4, 5, 6, or let's say one topic out of 10 topics, and they're actually going behind in this particular ESG reporting period, right? So that is how you basically prioritize the topics and go behind the journey. Brilliant. AI is one of my most favorite topics. It's a good question. How do we use AI in deriving data from the companies related to ESG and ROA and ROE? Will this data and AI tools be authentic and reliable? Please, thanks and regards. Thank you so much, Harpreet. This is a great question. We are, in fact, facing this particular challenge at this point of time. Now, I think you're somebody who understands this in a deeper context. See, there is AI where there is data, correct? Now, to me, AI is the most easiest thing as long as there is data. Now, the data itself is becoming a huge challenge because organizations are not able to point and say very clearly where the data resides. Although today we are discussing scope 1, scope 2, internal, scope 3 is external, but even scope 1 and scope 2, how many companies are really capturing this data? Like, to give you an example, let's say waste management, right? How many, let's say, when companies are realistically quantifying it and saying that what is dry waste, what is wet waste, what are we doing with it, how do you dispose it, and so on and so forth. Nobody's capturing it, right? So first of all, this is the biggest challenge that organizations are actually facing. Will AI help the scheme of things, and will AI help for data to be authentic? Definitely yes. But what I'm trying to point out is the data itself is not there today. That is where the big challenge actually exists. But it's a great question. I'm waiting for the day where let's say a couple of our customers come to us and say that we want your algorithms to work on this particular data. Now today the problem is, I think somewhere I touched upon the fact that you have multiple source systems today, right? The size of organizations that I'm working with today, they've got about 10 to 15, maybe more source systems today. And what we are trying to do is, we are trying to ingest data from all of these, let's say, data sources, because we don't need all the data. We only need, let's say, piecemeal data regularly flowing on a daily basis, on a periodic basis. Come and sit in the data warehouse where then you can have your algorithms work on top of it. Right now, the challenge is identifying the source itself. That is where the problem is. But at some point of time, I'm sure, let's say in the coming months, years, we will get over that particular stage, and it is absolutely going to revolutionize, how, let's say, AI is going to impact or going to help the ESG scheme of things. Brilliant question. Purpose of materiality assessment. Okay, now see, one of the things with let's say ESG reporting or any frameworks are going to push organizations is to have inclusivity of sorts. Secondly, the way I look at it, it also gives a genuine purpose of starting your ESG journey. How do you start your ESG journey otherwise? It cannot be just, let's say you have data, okay, chalo ye data collect karo, we start actually collecting it, putting it in some Excel sheets, converting it into ESG metrics, metrizers, and start reporting it. It doesn't work that way, right? How do you as an organization prove today that you involve all the people who are impacted because of your organization? The only way that you do is by beautifully engaging them in the whole materiality assessment process. Now, that is where, let's say, internally, let's say if you are about 1,000 people, you define representatives of these 1,000 people. I'm not saying that, you define all the 1,000 people as stakeholders. It doesn't work that way, right? These 1,000 people can always be represented by 5 people or 10 people internally. You define them as stakeholders, somebody who represents, right? Like, let's say a team of people. Externally, let's say you identify your topmost, use your ABC analysis and say that these are my top 5 customers or my top 10 customers who contribute to, let's say, about 80% of my business value, or let's say whose opinion will matter to me in my context of, let's say business, correct? Once you start defining those, when once you put it in a process, once you take their feedback, uh, they would then help you to arrive at something saying that, what is a material topic for your organization from a ESG context, correct? And your questions will be framed in such a way that it will be pontificated or directed towards, what environment is, what social is, or what governance is in that organizational scheme of things. So once you take all of this feedback, put it in an Excel sheet, have the weightage in place. If you recollect again, the table which I actually showed some time back will give you, finally you narrow it down and say that, internally, externally, what is the impact? And from a business, what is the impact for each of those topics for which you have got the responses back from the people, right? So that is the purpose of materiality assessment. I hope I'm able to answer that particular question. And many of the organizations are not, in fact, doing that. They straight away are jumping on to step 2, 3, and 4, which is like, saying that, collect data and start reporting. It will not work over a period of time. You're not kind of complying with all the, let's say, principles of, what ESG reporting is actually all about. Yeah. Can you help understand the difference between GRI standards and ISSB standard? Oh, this needs a deeper discussion. Do you mind I take this offline and probably come back to you with a little more, let's say, detailed response? Because this will take some time. Yeah, because again, IFRS S1 and S2 basically has picked up the nuances of, let's say what GRI universal standards speak about in terms of, general disclosures and in terms of, let's say, reporting guidelines, right? ISSB standards is trying to be a little more specific with respect to the disclosure side of things. But there is a reason why they have actually done this, and maybe I'll take this offline and probably report back to you or respond back to you on this. Are international companies really way ahead and doing well in comparison to India? Can you throw some light on it? Okay. Definitely, yes. I think if you have been reading about the ESG side of things, Europe is way ahead in terms of their journey. Yeah. And I'm not sure primarily is it because, let's say, organizations like, GRI are actually based over there. They are pushing organizations again, or frameworks like CSRD are much more evolved today. In fact, they are actually quantifying very clearly what needs to happen for an organization of a certain size in 2025, 2026, 2027, in 2028. So they have granularized it very clearly, and they are mandating it, saying that, when the onus is on you to prove that, this is not applicable. They are saying if you are above certain manpower, it is mandatory, absolutely mandatory for you to start reporting. If you don't do it, then, you will have to start, let's say, facing the music or in terms of consequences and penalties. Similarly, APAC is also now moving right ahead. In fact, if you, I don't know if you are updated about what is happening in Australia. Australia till very recently, I think was, going the USA route of, not really, looking at ESG and not taking that, ESG is really important. But now Australia has come out with a very clear mandate, very similar to what Europe is actually taking. For all of them, the magic date has already started. In fact, for Australia, it is from 1st Jan 2025, and the reporting period starts from 1st of Jan 2026. I wouldn't say India is very far. I think India is really adapting well. You need to understand India is a very diverse country, right? I mean, it's not very easy for, any organization to push it and say that, you start doing it. But to answer your question, yes, most of, let's say, the overseas geographies are really way ahead. In fact, I was very surprised that, even Middle East has actually picked up. It's a very unregulated market because, Middle East is not like in India, Europe, or Australia or US. There is not very definitive regulations over there. But I see a lot of organizations, voluntarily are picking up steam. And I think the Ministry of Company Affairs over there have started actually pushing organizations to adopt this. So a simple answer is yes, overseas countries are definitely a little ahead in terms of what we are trying to do. Whether definitely yes will be sufficient. Whether GRI, BRSR courses will be sufficient for ensuring quality reporting, or certain experts like engineers will also need to be consulted. It's a great question. See, I think when you look at a GRI or a BRSR courses, these are very framework specific, right? Now, what you're trying to indicate over here, an engineering expertise comes with an industry specialization also. I would imagine that, let's say an engineering expertise will definitely help. It actually strengthens, solidifies the whole cause. though there is no, let's say, mandate saying that you need this, but somebody who's doing this, I think is going a little out of their way and trying to prove that, they are indeed transparent and, I mean, they are for the ESG principles per se. So yeah, I hope that answers your question. While we are on the topic of BRSR, is there a particular qualification needed to provide assurance for BRSR core? I don't think so. It exists at this point of time, but maybe I think, Shweta ma'am or Chindu ma'am can take this question. My limited understanding says it is not there, but I think it is evolving at this point of time. Yeah. It will come at some point of time. I think it needs to happen because you can't just, allow organizations to publish whatever comes to their mind, right? You will have to, abide by, let's say, assurances, not just assurances. It has to move to assessment. It has to move to eventually a full-blown audit of sorts. That's where I think, let's say leading practitioners today are looking at, let's say, adopting this as, one of their offerings and trying to, make some business sense out of it. Yeah. I think that was the last question, and I think I have answered most of this. I'll take a note of this particular bit. Can you help understand the difference between? Yep. Cool. I have taken this. Shweta ma'am, Chindu ma'am, anything else?
No, sir.
No, sir. So
Thank you so
we'll
much.
just
Really
give
appreciate
a,
this. Yeah, please go ahead.
thank you, sir. Thank you, sir. Sir, we'll just give out a vote of thanks, and after that we'll end this.
Sure.
Thank you, Kaushik sir, for your in-depth and enlightening presentation on sector-specific sustainability, a deep dive into GRI sector standards. Your insights into the importance of sector-specific standards, the challenges and opportunities they bring, and the practical steps for effective reporting have been immensely valuable. We would also like to express our sincere gratitude to the chairperson and vice chairman of the SRSB for their visionary leadership and constant encouragement in organizing initiatives like this. Finally, we extend our heartfelt thanks to all the participants for their active engagement and thoughtful questions, which made this session both dynamic and impactful. Your enthusiasm for learning and improving sustainability reporting practices is truly inspiring. As we conclude this session, we encourage you to stay connected with us for upcoming webinars and initiatives on sustainability. Together, let us continue driving the agenda for responsible and transparent business practices. Thank you, and we look forward to seeing you in the future sessions. Take care and keep championing sustainability. Thank you, sir. Thank you for
Thank you
joining
so
us
much.
today.
Really appreciate. Thank you, sir.
Yes.
Thanks.
Yes. You can leave the session now. Tech support, you can stop the recording.
आ गए
Tech support.
Recording
Let's stop the recording.
stopped.
Thank you, sir. Bye, sir.
Thank you.